Good morning, everyone. Welcome to the TradeXchange Week Ahead webinar. Taking a peek at last week and then a look at the week ahead on March 20th and moving forward. Just a recap, members. Markets yet again had another volatile week with the NASDAQ and S&P ending the week green and the Dow ended the week lower. Weakness continued in the financial and bank sector as regional banks continue to get hit as FRC, First Republic, got a $30 billion bailout from 11 large banks. And on Friday, after the close, saw some volatility following a report by the New York Times that they are looking to sell shares privately. On the European side, we watched continued headlines out on Credit Suisse as they received emergency assistance from the SNB, and continued headlines following the possibility of UBS taking control over Credit Suisse. We'll see the outcomes on that hopefully later today and into tomorrow. One area of strength that we saw this week, the mega cap tech sector. Bond markets continue to surge as the yield markets take a hit. We mentioned last week that traders are focusing lately on the 2-year yield. This time around, which hit highs of about 5.1% on March 8th, ended the week around 3.8%. Another area that took a hit this week was crude oil. Oil hitting lows not seen in 15 months and down close to 15% this week below $70. Traders constantly ask us why the weakness in crude oil, and the mindset and common answer: recession fears. Recession fears are growing more and more, especially following these financial and bank sector hits, and in fact are hitting the oil area and energy sector on specifically a faster and possibly harder landing on the recession side. As we'll go over later on in the webinar, you'll notice that we're going to be going over the IWM, the small cap sector. Small caps continue to get hit as the IWM fell over 2.5%. In 2 weeks alone, though, we've seen a drop of 10% on the IWM, focusing mainly on the regional banking side. That has cratered that small cap sector to being the biggest drop in all of the major ETFs in regards to the SPY, triple Qs, and the DIAs. Bitcoin, a name that we, in a way, forgot about the past few months, saw a surge above 27,000, a level not seen since last year. Bitcoin is up over 60% this year. This week, members, it is all about the Fed. We have the FOMC announcement and the Fed chair presser on Wednesday. FOMC announcement at 2 p.m. Eastern Time with the Fed chair press conference at 2:30 p.m. The main question on everybody's mind: what does the Fed do following recent inflation headlines in the banking areas? Will they follow the ECB and stay firm with their expected rise, or will they take a step back and reevaluate all situations? We had some commentary out by El Arian calling on the Fed to raise by 25 basis points at the next meeting. Members, it's a toss-up. As of now, about 40% believe the Fed will stay put, and 60% believe we will see a 25 basis point hike. Stay tuned to Wednesday. It'll be a very important day and could dictate the next few weeks of market trading. The other thing that we'll be watching closely are these banking headlines. What will happen with Credit Suisse, CS, or First Republic, FRC? Or is there something else hidden that we're not hearing about in regards to another bank that we have to be watching coming up this week? Very busy week, very busy last week. And we mentioned the volatility, members, continues. We have not had I cannot remember one week of a non-volatile in regards to news flow, headline-wise, or market volatility. and we don't think that's going to start this week. Taking a look now, members, at your week ahead report. Not much going on this week outside of your FOMC announcement and these constant baking headlines, but we'll go through each and every day. Monday, not much. We do have ECB's Lagarde appearing before the EU Economic Committee. On Tuesday, we have existing home sales in the US, Canada's CPI, and the FOMC meeting does begin on Tuesday. Wednesday, it's all about the FOMC rate decision at 2 p.m., followed by the Fed chair press conference at 2:30 p.m. Overseas, we have UK's CPI and PPI. On Thursday, on the US side, we have new home sales. On the European side, we have the Bank of England announcement in minutes and the EU Leaders Summit, which is a 2-day summit that begins on Thursday. Friday, not much, just the durable goods on the US side. As always, members, you have your company events for the week and your conferences. If anything or anyone has questions, you can always reach out to us on the Ask Desk or email for a breakdown of any company's reporting. U.S. economic calendar for the week. Monday, not much at all going on the U.S. side. Tuesday, we're watching the existing home sales. Wednesday, it's all about the FOMC announcement and the Fed chair presser. Thursday, jobless claims. It's back in the view. We haven't, typically it's a week by week report that in the past really was a non-event, but nowadays with these inflationary issues and the jobs strength, jobless claims has been something to keep a close eye on. We also have new home sales at 10 a.m. on Thursday, and on Friday, durable goods and the PMI composite. We also have Fed speak James Bullard on tap for Friday, first following the blackout period. International economic calendar for the week, and a small blip in regards to the week ahead TradeX commentary. Earnings, basically, we are done with earnings season. Not much going on this week. We do have GameStop, GME, and Nike, NKE after hours on Tuesday. And we have One Home Builder, KBH, after hours on Wednesday. Not much else, members, in regards to earnings on tap. Your fear and greed, that extreme fear mindset is still in place. Last week, we were around 20 to 24. This time around, still on extreme fear at 25. Basically, in our opinion, it's all based on the uncertainty of what's going on regarding the Fed and the banking and financial areas. Your weekly sector performance, we do see a mixed area here. As we mentioned before, we saw strength in the S&P and NASDAQ, and that weakness in the Dow. Energy names took a big wallop this week following the weakness in crude oil and financials. Two of the strongest areas from last year continue to see the weakness this year. Strength this year in communication services, technology, and utilities. Your indice comparison, members, we are still seeing a little weakness continuing. That Russell, the purple, look at this drop we've seen in the Russell in the past few weeks. That's the weakest in the area of all four of these indice comparisons that we're watching. So we're keeping a close eye on small caps if we do see a pop back up. But members, not too much action this week. We added a sector a percent mover in regards to a better look at the sector areas. As we mentioned, technology and healthcare, the strongest, financials, industrials, and energy seeing the weakest of the bunch. Communication services up over 5%. So we did see strength on the tech side and weakness continuing in financials. We mentioned earlier target rate probability is about 40% of a no cut, no raise, and on the about a 60% of a 25 basis point hike. Your 10-year treasury at spot 4.2. Year-to-date percent returns, members. Look at this jump in lumber this week. About 25% move in lumber. Who would have thought this kind of a volatility in this area? But lumber up 21% year-to-date. The VIX, not much of a move. Still up about 3% on the VIX. The NASDAQ saw a nice little bump. Gold as well. Such a strong move in gold. You'll see it later in the charts, but up around 7% in gold. Coffee, not much move. Copper, a small downtick. S&P, a small uptick. And gasoline, energy names took pretty big hit this week. Gasoline down about 6%. You had crude oil down 13% this week. Heating oil down 4%. And nat gas Not that big of a mover, but still down 47% year to date. Your AAII investor sentiment survey, that bullish mindset, members, is eroding so fast, and the bearish mindset is just increasing just as fast. The bullish mindset 19%, while the bearish mindset at 48%. On the neutral, around 32%. So clearly, the mindset is on a bearish side. Sector outlook weekly year to date. As we mentioned, it's the tech areas, members, information tech, communication services that continue to see a strong move, up both around 15%. Energy down 13% year to date. IPO lockup expirations, none on agenda. These are your expected IPOs with your FDA calendar. These are all scheduled events. We'll be providing any updates on the daily morning mashup in regards to any changes regarding any FDA calendars. So now, members, we're going to jump into your charts. Right now, we'll start off with gold. Look at this chart. It's a beauty, in my opinion. We added this 2000 level resistance that goes back to April of last year. Last week, we mentioned how that key resistance level of 1875, right here, members, right here. We watched and saw how important that level is for a possible upside move. What did we get? A break above 1875 and ended the week at 1993. A straight move shot to the highs. We are now at a key resistance level of 2000 that stretches back to April of last year. So we're watching this upside move, members, of this 2000. And then we got our support levels with a key back support level at 1875. Gold, pure technical move. Once that downtrend was broken, saw an upswing, tested support, did not break support, and the volume just came straight into, look at the volume, came straight into gold, breaking two highs of the year. SPY daily, no changes to the chart, members. Last week we mentioned how important that 380s level support is for the next move in direction. What happened? We tested 380 perfectly, 380.65, and saw a strong reversal day on that same day, which added that bullish mindset. We did see a pop close to that resistance level, but ended right at 390, that support resistance level right now. So we are watching SPY very closely. A very tight range of the 380 to 400s. That is a close watch for us for any upside or downside move, especially with your FOMC meeting on tap. NASDAQ, no changes to the chart, members. Question yet again, how technical is this chart? We mentioned last week that the NASDAQ is close to that key support level of 11,000. What happened? We tested that almost perfectly and saw a strong reversal move, which in our opinion is a bullish action. We've seen it before, members, where it touched resistance and saw a straight shot sell on that bearish move to the downside, which continued the bearish mindset. This was a bullish reversal off of that support level, and the strength continued, ending the week at 11,630. That's a 600-point move, members, off that support level on the NASDAQ. Very interesting. SPY daily on a technical and moving average look, as well as your triple Q daily on a technical and moving average look, IWM daily on a technical and moving average look, and your 10-year yield. Just look at that testing on this 10-year yield. We'll go a little more into detail on that right here. So no changes to the chart, remember. This is your 10-year yield daily. This is one of the areas that is watched closely by a lot of traders. We mentioned weeks ago on that euphoric move on the 10-year yield. Once that was broken and that uptrend was taken out, we saw weakness ensue and continue to end this week. We are back into that support range that stretches back to December of last year, this 3.4 to 3.5% range. We're testing this support. If this level breaks to the downside, you have nothing, members, to 3.2%. If we see a reversal and test, we could possibly go back up to 4%. We'll see what happens this week with the Fed, and we'll get a clearer picture next weekend on our weekend webinar. But as of right now, members, basically closing right at support levels. That goes back to December of last year. Diamonds on a daily, moving average technical look. IWM daily. This is an interesting chart. We mentioned last week how this chart was a look at disaster. We mentioned that 175 on the IWMs is key level to watch closely for support. And we saw a quick break right to next level support at 170s. We saw the low of 170.38, yet we stayed in the range from the end of December. So we are in a very tight level support right here that we're watching very closely. With the FOMC this week, very important for the next move in the IWMs. But members, look at this drop that we've seen. Keep in mind, members, this chart and these levels have been there. We always mention if we make any changes to the charts. So this was no change to this chart. These support levels were there. Once this level of support was broken, straight shot down to the 180 support resistance. Once this level was broken, 175. Last week we mentioned 175. When that level was broken, 170. So we're watching this level very closely. As you can see, a test back in December. Next up, HYG daily on a moving average and technical look. Your S&P 500 daily. No changes to the chart, members. We mentioned last week the 3,800 level is key for the bulls for them not to break that on the bearish mindset. We saw a low of last week of 3,808. So that level was tested, supported, reversed, and saw strength to the bullish upside. A triple whammy to the upside, members, ending the week at 39.16. 3,800 is the downside. Watch continuously to be watched closely because we have nothing, members. If this level breaks, we really have nothing to 3,600, and then we're retesting last year's lows. So we're watching this very closely for this 3,800 level to be supported by the bulls, and hopefully we do not see weakness breaking this that could retest that 3,600. VIX, what can we say? We mention this every week. Groundhog's Day yet again. Test, bounce, test, bounce, test, bounce, test, bounce. We'll see what happens this week with the FOMC. Oil. We had to go back on a weekly basis now because last time this chart broke to new year lows, and we basically had no views in regards to any support coming up. Right now, we're at an oil 3-year weekly. Look at this move, members. Once all these support levels were broken, it's a clear-cut shot lower. We're watching $60 very closely. If this $60 level breaks on the shorts on the downside, there really is nothing to the 40s. So we're watching this very closely, keeping a close eye on crude oil, and watching these range between 60 and 65, we believe is a very, very key level for support on the bullish side of oil. Very closely. And 80, members, look at this 80 on a weekly basis. Look at this test on an 80. Nonstop. 1, 2, 3, 4, 5, 6, 7. It's about 10 to 12 weeks of them testing that 80 level upside move. So, members, a very tight, very big range. 60, 65 downside with that 80, 85 upside move. And once those levels are broken, we could see a strong move in either direction. US dollar daily. We added a short-term downtrend this week just to see if we get any upside move. The US, once we broke that uptrend, members, we did see that weakness ensue. Just a quick peek at that. The US tested the upside resistance at around the 105s level, could not break it. It's basically in a very tight range that goes back into end of December of last year. This week could be very important with the FOMC, and we're watching it very closely. Bitcoin. We added a new resistance level at the 27.5 that basically brings you into that gap level. We had a gap fill last week that we mentioned on last weekend's webinar. Filled this gap right at support, 20,000, and then a vicious move to the upside. Once that 25,000 level broke, it's a clear shot right to the next level support of 27,000. That brings us back to that upside gap on watch. But now, members, we do have a downside gap back at 20,000. With the Bitcoin, who knows? We'll see how the Fed announcement affects Bitcoin this week. SMH daily on the moving average and trend look. And lastly, the euro. No changes to the chart, members. Euro continues to trade range bound. We've been talking about these levels for the past couple of weeks since we added this chart onto the weekend report. 105 to 107. And what do we see? They tried to break out the euro, but then we had that huge bearish reversal on the euro that day, which basically denied that upside move. So we're back in the range of 105 to 107. Clear move. This 105, members, is a very strong level to watch because we basically have nothing until maybe the 103-ish levels and nothing until we break parity at $1. So we're watching the euro closely on both directional moves. Right now, we do have a downtrend break. So the mentality is a little on the bullish side. But members, keep in mind, we have this uptrend right here that hasn't been broken, but it's very close now. And the closer we get, the bigger the fall if it does break on the downside. So members, that's your week ahead weekend webinar. If anyone has any questions, please shoot us a message in the chat box. We do have a few in the emails that we will answer real quick. As always, one question that is asked every week, our thought process for the upcoming week. Members, it's all about the Fed. What is the Fed going to do? In our opinion, if the Fed does pause, is the market going to see that as a more negative move than let's say an upside of 25 basis point and then a pause, or a hike of 25 and a more dovish tone? I believe that would be the ideal situation and scenario for these markets. If they come out and do nothing, fear could come back with traders thinking to themselves, what is really going on in the U.S. markets when the ECB stays true to their 50 basis point hike and the U.S. Fed basically goes to a pause? Is something not going right on the U.S. side for the Fed to basically flip within a few weeks instead of a 25 to a 50 basis point hike that we were thinking of to a basic pause? It all comes down to the market reaction. We believe on the TradeXchange side, a 25 hike and a pause or a dovish tone would be a sensible move that will not, in a way, add more uncertainty to the market. But we'll see what the Fed does on Wednesday. Members, it's all about what happens as well with these banks. What happens with Credit Suisse? What happens with First Republic? At this point, members, it's a toss-up. We'll see if someone comes out to support these banks. What does the FDIC do? What does the Fed do? What does the ECB do? What does the SNB do? It's a toss-up. And as we always say, markets do not like uncertainty. And right now, I do not believe we are in a more uncertain period this year than right now. Hopefully, the Fed could bring things back into play, add some sense of stability. But as we've known from the past, what can we really expect? Who knows? Hopefully, this won't be another transitory moment or a disinflationary moment that we mentioned in the beginning of the year. Members, if anyone has any questions, let us know. We have one more question. We're going to go quick mic silent, and we'll be right back. we had a question in regards to our thoughts regarding this banking area. Members, what can you possibly say at this point? Right now, who knows what's going to happen? You're having headlines across the board all weekend, which you can look in the news desk to get a feel in regards to, what's going on overseas with Credit Suisse, with UBS, and it's basically in the situation where UBS wants a backstop in any worst case scenario if they purchase Credit Suisse. How bad is that mindset to us traders? Thinking to ourselves, Credit Suisse, which was valued around $7.5 billion right now, UBS is looking to get them for $1 billion with a $1 billion backstop. I don't know. It's just interesting to us on this side of what's been going on, how fast things have been going on. And now you're continuing, as you mentioned, members, watch the news desk. Hitting right now, Switzerland is weighing the nationalizing of Credit Suisse in full or part. What is going on? Who knows? How are these situations happening when they're backstopped by the SNB, and you had a backstop for First Republic this week as well by 11 of the top banks? And now they're asking for money on a private offering, which is being circulated by New York Times. Who knows what's going on? I don't know what's going on. I'm sure 99.9% of the people out there have no idea what's going on. We're watching these headlines very closely, and it's a little nervousness when everyone thought last Monday everything was fixed, and clearly they were wrong yet again. Members, thank you for joining us this week on the TradeXchange Week Ahead webinar. Stay tuned to that news desk, members. Get yourself ready for Monday morning. Headlines are coming throughout the day, and we're here, members, nonstop, trying to provide you the information you need to get yourself ready for the open on Monday. Members, enjoy this weekend. Thank you. We appreciate everyone. TradeXchange out.